And thank you so much for joining us. As a company entrusted with billions of pounds of savers' money, what do you do to navigate this very tricky environment that we're currently in?
So markets, in some sense, are in a good place because we've been seeing rising markets for quite some time, and just only very recently have we seen some volatility come back into markets. But 2018 is an interesting year. We're seeing central bank policy shift. They're moving from net redemptions to net issuance again. We're seeing interest rate rises coming through in the States. We're seeing perhaps a less predictable administration in Washington introducing more protectionism, possibly creating trade wars. So that the market backdrop is definitely changing. We're into a new phase there. And of course, as asset managers, navigating that is our day job. So we have that to contend with. There's a changing regulatory agenda. We're seeing new regulation coming in, and things like MiFID II are going to take a while to bed down and see how we see the implications to all of that. And of course, navigating the UK's exit from the EU is interesting. But notwithstanding all of that, I think we see a broadening of the opportunity set that is out there for us to take advantage of. And whether it's things like ESG investing and impact investing, really bringing a new tone and a flavour to the sorts of things that we do for our customers or our clients. I think there's some really exciting things going on, and I think for me the challenge in the day-to-day job is to make sure that in dealing with the challenges we don't lose sight of the fact that continuing to think up creative investment ideas which really meet our customers' needs and helping explain why they'll work for them is kind of what we need to do, and we need to keep that momentum going.
You talked there about customers' needs. Obviously their perception of what your industry are doing is really important. Tell me about that and what you think the perception of asset management is at the moment.
So asset management has been in the headlines a few times in recent years, not always for the best of reasons. And yet what we do is immensely important. It's immensely important from a societal point of view, because if you think about what we do, it's really, we collect small pots of money from lots of different peoples and we put them together to allow those people ultimately to get exposure to, for example, big infrastructure projects or other things that they simply wouldn't be able to do if they were doing it individually. So there's a real power to that. We have a real impact, directly or indirectly, on the real economy. And I think we perhaps lost sight of the fact that our fundamental role is to make sure that capital flows smoothly and efficiently around the system. So we have to rebuild the confidence that we are appropriate custodians of the trust people put in us. And I think we're trying to do that. And there's a number of different aspects to that. Diversity is one of them. We need to look more like the people on whose behalf we manage money. And that's something that I've been particularly passionate about over the years.
We're here on International Women's Day. It's good to hear you talking about diversity and what it can bring. Why is it so important? And why is cognitive diversity crucial in an industry like this?
Well, it's very clear. All the research supports the fact that diverse teams make better decisions and are better at problem solving than homogeneous teams. And it's diversity, it's not just about gender. So it's important, International Women's Day, yes, we must talk about gender, but diversity is much more than that. You mentioned cognitive diversity. That's absolutely right. We all walk different paths in life, and bringing together those different paths is what creates more imaginative, better solutions on things. So I think it's very important, but it's also important, I think, today to realise that in financial terms, there is still a gender divide. We see that women are more likely to retire with smaller pensions. They're more likely to experience poverty in old age. So there's still a gender element to things, even like pensions, and trying to work out what we need to do structurally all the way through a woman's career to make sure that we get that imbalance out at the end of the day is really important. So I think for our industry, talking about International Women's Day today is partly about addressing that gap in retirement.
You talked about diversity being a crucial point in terms of relationship with the public, but also you touched upon what you can invest in and how important that's becoming to the end client, the customer, if you like, in terms of ESG and impact investing. How much do you see companies embracing that, and how important is it becoming to the customer?
I think in truth, companies are embracing that at a different rate. We see some companies who absolutely understand that their shareholders are not their only stakeholders, and that broader societal impact that they have, it might not be financial today or tomorrow, but if they chase short-term profits at the expense of thinking about that longer-term social impact, ultimately it will have a big societal impact. And when you see some of the companies that have failed spectacularly, it's often been because they focused purely on short-term financial metrics at the expense of some of the things that they needed to do to build a sustainable business. So I think it's really important as we engage with companies that we build that understanding and we discriminate between those companies that get it and don't. But most importantly, it's already becoming clear that it's much more important for the people on whose behalf we invest. And we're seeing more and more attention being put in it, particularly through collective schemes like pension schemes, but actually through what individuals are choosing as well. And there's a youth element to that as well. Millennials are much more likely to say that there's an importance of the social impact in addition to the financial impact than perhaps people at the other end of the age spectrum.
Could it be a great opportunity for this industry, which, as you said, hasn't always attracted headlines for the right reason, to actually have a massive reputational shift if they can be seen as a force for good, if you like?
I think it would be terrific if we could do that, but we need to earn that. We can't expect anybody to confer it on us just because we say nice things and produce glossy brochures. We've actually got to live and breathe and demonstrate it, and I think that will take time to do. But I think the wish for companies like M&G, the wish is absolutely there to sort of play our part and try and do that and work out how we can do that.
So that's embracing new areas of investing. One thing that's also been quite a hot topic over the last couple of years is the explosion of FinTech and digital disruption. I know we've talked about this in the past as well. What are your thoughts on that, and what threat it poses, but also what opportunity it brings to this business?
So I love technology. I find the way in which technology has suddenly the industry, the investment management industry, has been woken up to the power of technology has been fantastically exciting. There's lots of great ideas out there. Many of the small fintech companies, it's not commercial, their idea, or it won't be proven in practice, but nonetheless there are still some really exciting things that are going on. I don't tend to believe that robots will replace our relationship managers, our fund managers. I don't buy that argument. Artificial intelligence it is there, but it's not going to replace what we do, but it is, I believe, going to enhance what we do. And I think that for us, the trick is to try and work out where are the optimal points where we can really enhance our decision making, whether it's through AI, whether it's through big data analytics, and sometimes what we can do to streamline our basic operational and administrative processes to allow us to make faster decisions, or to allow us to remove errors from the system, so that we actually can run a tighter, slicker, sharper shop than we do at the moment. And I think there's a lot of opportunity in that. But we're at quite early stages in the implementation of some of that. There's a lot of talk. Possibly we're at peak hype in some of these technologies, but that doesn't mean that some of it's not going to come true in practice over the next 3 to 5 years. I believe it will.
If it does come true and it changes your model, could that also have an impact on costs for people and what's involved in terms of the structure of costs? We've got a lot of debate this week at this conference about cost transparency, how important that is. What are your views on that?
I think done in the right way, the power for us to reduce our unit cost of production, if you think of us as a manufacturing business, is there's a real something to go for in that. We tend to have, as an industry, we have data that's held in lots of different places. It's manipulated by spreadsheets in lots of different places. It's handed between custodians and depositories and other counterparties in lots of different ways. And at every point that you do that, you risk introducing errors. It slows things down, and potentially you're doing things in a much less efficient way. It adds cost to the system. If we can get to single data stores, to single data lakes, if we can industrialize that operating system, if we can move from sequential processing to simultaneous processing to speed everything up, all of these things could potentially make our unit cost much lower than it is today. And that's the holy grail. It's not going to be easy to do it, because we need to get lots of different counterparties around the table to agree what the optimal solution will look like. But that disruption will come. I'm quite certain that disruption will come. Probably not this year or next year, but in 10 years' time we'll look back and we'll see a much more automated industry.
The other aspect about cost is value for money. You touched on that in your panel session earlier, and somebody actually asked you the binary question, yes or no, are asset managers paid too much, which put you in an awkward spot, and you answered very cleverly some, which I enjoyed. But I think a lot of people do ask, is this value for money? When you talk about removing cost, actually, is that actually distracting people from the key question here is, are customers getting value for money in terms of their investment?
So you have to, in terms of the fundamental question, are people getting a valid return for the risk that they are taking, the cost they are paying for that risk? And if you can answer yes to that question, then the answer is yes, they're getting value for money. And I think that's what we need to hone down on. Now, in our industry, we are a people business, and the talented people are effectively partners in our business. Whether we're legally structured as a partnership or not, we are partners, and we have to build an environment that is conducive to what they want to do. And we know that those people, those teams, are a huge part in generating the profits that we have. So there's always that element of understanding that we don't sit here on top of a business and pay cookie cutter people to do things. We pay talent, and that talent shares the pain and the gain, and that's how it should be. The quantum is a challenge to determine, and there are different mechanisms for doing it. But fundamentally, that principle, sharing the pain and the gain, is one that we absolutely subscribe to within that. I think with better data analytics and better clarity around value for money, one of the things that will help us do is really to discriminate between where is the true talent and where is the Me Too. And I think I don't object paying well the people that demonstrate real talent year after year after year after year. I do object to paying mediocrity. And I think, if you go back 10 years, it was too easy for people to coast on rising markets and look like heroes or heroines in doing that. I think we're getting much, much better at discriminating, and I think that's important because we have a duty to our customers for them to know that we're only rewarding where it's valid to reward.
And interestingly, you've talked about the fact that when you've looked at lots of different cost structures across lots of businesses you've worked in and firms you've been involved with, that actually you've seen a move where people do want simplicity, perhaps. Yeah. And if that's the case, is there an innate belief in humans that if you tie somebody's return to how hard they work, it's going to work better, or it's going to bring you a better reward?
Well, I think it's very complicated. I think that the very simple structures where you pay a percentage of the assets under management, yes, if assets go up because of market movements, then you're paying for that rise rather than for skill. That doesn't necessarily seem inherent, but if you are wanting to make sure that you only pay if there's more money to pay it from, if you like, then that, as a trustee, that might be a valid answer. So there are different objectives that we're optimizing to, and I've constructed many different performance fees and many different fee structures over time that attempted to align economic interests, which I thought more appropriately, but actually it comes back to many clients do just want something really simple that they can explain and understand. Now, I'm not arguing in defense of either one or other. I just think we have to accept that not everybody wants the same thing. But if we can get more clarity around disclosure and comparability, it will help people make a more informed choice. But I think the sort of perverse thing at the moment is that we are seeing once again a proliferation of different ideas about what fee structures might look like, but they're all more complex. And I think that some people find that in and of itself confusing.
So that's talking about rewarding talent. You've also talked about retaining talent and bringing talent back into the business, specifically for women. Just going back to what we were talking about earlier, how do you make this industry an appealing one for women to stay in or come back to?
So I think we did go through, post-crisis, and particularly when the financial services industry in general took such a bashing, one of the things that we see when we analyse how people feel about the companies that they work for is women are more likely to put trust and reputation of their employer higher than men are in terms of one of the things that they helps them decide. And I think that's one of the reasons why we saw more leakage of women out of the industry post-crisis. We need to get some of those women, and indeed men who chose to leave the industry, back in. We want to get them back in. We've been working really hard at the early entrance stage. We've now got the percentage of female applicants to our graduate programme, for example, as now over a third women, and that's up dramatically since if you go back to 10 years or so. That's risen, and that would look quite good against the industry as a whole. In our apprenticeships program, we've had more women than men come through on that, which is fantastic. So we're looking at every stage as we go through. Returners is a really important part of that, and the more than 20 people that we've had come back into the business on a returners program. To come onto the returners program, you need to have taken voluntary leave of absence from the workplace for 2 years or more. That's the criteria. Just over 70% of those that have come back on that basis are female, the rest are male. So that's been successful, and we just need to do more of that.
So this is a chance at this conference to have 1,000 people in the same industry under one roof at one time. What do you hope to impart, and what do you hope they take away from what you had to say today?
Well, I would like to think that the people in the room and the trustees, the pension funds that are in the room, understand how seriously we're taking a number of different things that I think matter to them. So we've talked about impact, we've talked about diversity, we've talked about the need to demonstrate value for money. So I think these are all really important things, but also the fact that it's not just about responding to what the outside world chucks at us, that we are thinking about new ways of finding answers to their problems, new ways to invest, new ideas to bring them. And so we're a forward-looking industry. It's not all just about reacting to other stuff that's happening or responding to what's happened in the past.
And perhaps this is a fantastic opportunity to have those collaborative conversations.
It completely is. It totally is. I mean, that's really why we're here.
And thank you so much for joining us.
Thank you very much indeed. It's great to talk.